Buddy, welcome to the live stream. It is Thursday morning, February 22nd, 2018. Looking at the Dow futures right now, indices are up. They had a nice rally today. Yesterday was a bit of a rough patch. If you read the Trader's Espresso is out, as well as the video edition. I talked about the Fed minutes. Bottom line is that at first the Fed minutes looked like what the markets were hoping for. You know, the markets, traders are looking for any major change in language, and I think they found it. About 25 minutes, the minutes were released at about 2:25 is when the bond sell-off started to happen. Yields were spiking. That's what led to the stock sell-off, was just this concern about high yields. So normally bonds, you expect bonds and stocks to be negatively correlated. They're at a little bit more of a positive correlation now, just because of this concern about higher rates. There was some language in there that suggested that at least some participants in the FOMC meeting were concerned about the economy overheating instead of just growing. That's what led to the sell-off. It was really, if you look at a chart of it, it was really an extended sell-off going into the close. But they've rallied really nicely now. I mean, the Dow's up over 200 points, the index is up 46, the composite's up almost 40. The S&P's up 17, and the Russell's up 8.83. The Dow is leading it, and that wasn't how it was at the market. When the market first opened, the Russell was really the one leading the charge. It had by far the largest, on a percentage basis, had the largest gain. But the Dow is leading it now. It's up almost 0.9%. Yields are still above 2.9 or 2.91 right now. The VIX is down 5%. It's below 19. The VIX on the volatility on the S&P and volatility on the Russell on small caps are about the same right now in terms of percentage drop. About right around 5.5%. The dollar is down 0.2%, just about. Gold's down, crude's down, and the EIA number came out, and I completely. It came out at 8:30, so it tells me that tells me there was a build or a smaller than expected drawdown. Let's see what we're dealing with here. And actually, no, I'm wrong. Normally it comes out at 10:30. It's actually coming out at 11. Not only is it delayed a day, but it's also delayed by half an hour. So I missed that part. So we may be seeing an opportunity here to trade crude oil. Again, when a piece of economic data comes out, I don't like to trade it right away. Too many big moves, big reversals, so it can be very deceptive. It can be kind of a head fake. Looks like the market's going lower and crude's going lower, and next thing you know, it's up 10 ticks like that. I mean, it doesn't even trade those ticks. It just goes right up there, so it just skips over. And looks like the number came out, so the market's initial reaction to that is to be bullish. Pretty solidly bullish too. Trade Flash isn't helping me. It's just saying crude spikes after data, say traders. I don't think you need traders to tell you that. I'm looking at it right now. So yeah, see what I mean? Unless you catch the move down here, which you're not going to know unless you have access to the data before everybody else does, which would be illegal because it'd be inside information. But sometimes it feels like somebody does have that information before everybody else. If you trade down here, you're in great shape. But if you get in after the move has already happened, which, you know, we were already up here, right around here, you know, 2 seconds after the data came out. So really the only thing that you can do is just kind of hope for a pullback.
Paper blueprints are
Okay. So consensus was a build of 1.8 million barrels. It was actually a drawdown of 1.6 million barrels. That's why we're seeing this huge spike. We're seeing this big spike in crude. So hopefully we can catch some of it. Nope. Not for you. No soup for you. So actually that trade was flat, I mean, other than transaction costs. So right now is not a time to try to catch it. We're oversold here, overbought rather, here. So I'd rather wait for a little bit of a pullback before I get in. You know, the momentum across time frames is still showing that we'll have future bullish opportunities to get in. And I think that that just, you know, emphasizes for you that a trader's best friend sometimes can just be patience. Don't let this fear of missing out get you, because what it will do is it'll spur you to get in at the top. At the top of a move. More often than not, you're closer to the top of the move than you are to where it began. And if you're closer to the top of the move, that means that when it does top, it's going to rip against you, and you're probably going to get out at a loss once you realize. Of course, it gets even worse if you hope like, oh well, I'm on a loss now, but it'll turn around. It just keeps getting, the loss keeps getting bigger and bigger until finally you just can't take it anymore and you capitulate. That's how short squeezes or long, you know, that's how, you know, that's how big moves happen a lot of times, is a squeeze. You know, the longs get squeezed out or the shorts get squeezed out because the move is just going so fast and furious against them. And if you do miss out, so what? I mean, you can't lose what you didn't have, right? I know that's not it's not easy to adopt that kind of a Zen attitude when you're trading, but it's necessary. You know, unless you want to be forced to live your life as a dirt poor philosopher, get some philosophy now. See, and what stinks was I had that right, and it touched that price level but didn't fill just before it made that big move up. And now we're seeing some pullback. We were seeing some pullback here. See, and that's what happens when I don't follow my own advice. Let's just hope this sustains. We got this going for us over here. What I would have really liked to have done earlier, and I just didn't want to take so much risk, was actually add to that position on the pullback But again, like I said, I didn't want to take the risk. In hindsight, it would have been a good trade. It would have worked out for me. But hindsight's always 20/20. When you're in that moment, a lot of times when you have the tug to do that, it may just be the fear of missing out. So unless you can distinguish, am I motivated by this fear of missing out, or am I motivated by confidence that I really truly believe, based on my feel of what the market's doing and what I'm seeing, that that's a good idea, that this pullback is a dip, it's a buying opportunity, and you don't have a lot of time to think about it, right? Checking in on the indices, the Dow is up 270 points. NASDAQ 100 up 57, Composites up 52, S&P's up 23, the Russell's up 13.4. Yields, 10-year yield is still down at 2.915. That's where it was, I think, last time we checked on it. And again, this is a day where the futures and the cash markets are not that far off. They're in sync with each other. I guess as close to in sync as they can actually be. Now, I'm not talking about the boy band. I'm talking about just what they're doing right now. And the dollar was down, 19 basis points. It was down 0.2% last time I looked. Bitcoin is down. Right now it's $10 below 10,000. It was over 11,000 a couple days ago. I think that this is a signal of a decreasing risk appetite. I understand that investors in Bitcoin are not necessarily institutional investors. They're more smaller players, and there may be some smaller players with big money moving that market. But also keep in mind that there's futures now in Bitcoin, and that there may be some institutions playing the Bitcoin futures. I think the bigger, more conservative ones are steering away from it. I would not be a bit surprised if Goldman Sachs were playing Bitcoin futures, if their traders were doing that. They've actually talked about, if they're not already, making a market in Bitcoin futures. So I think Bitcoin and Bitcoin futures right now, cryptocurrencies in general, because they tend to be very highly correlated, are kind of a proxy for overall risk appetite. European markets are down. They've been down all morning. slow stochastic is moving down. You're probably tired of hearing me say this by now, but I really think that's important. You might catch a leg up here with the fast stochastic crossing above overbought, but I really am of the belief that at least I want to wait. And the thinking behind that is, okay, yeah, I'm missing a little move here, but when I get both slow and fast oversold, I think I'm setting up to catch an even bigger move. Yeah, this was a really bullish development for crude. Yeah, that. So seeing momentum down, but it's taking its time developing. Making this really difficult to kind of assess. Don't do me any favors. It certainly isn't doing me any favors right now. just about 9. It's 9:34, 11:34 on the East Coast. Traders on their way to lunch. I might kind of leave the stream going as I hang on to this trade. Because it's always fun to swing from a profit to a loss. And right now what this is telling me is there's still a tremendous amount of indecision. This is in a sideways of moving consolidation. You know, I'm going to have to wait, I think, for a better time. You know, let this be a lesson to you. Follow your own rules. You'll be happier. The good news is, I mean, I have been consistent this week, so I like to keep it up. You know, we've watched some losses develop. As long as at the end of the day the gains outweigh the losses, if you have a goal and if you've hit it. But I think, you know, that's important, but one of the things that's been most important to me is at the end of the day, can I say, regardless of whether or not I hit my goal, how well did you trade? Like, did you trade well today? Like, in your opinion, did you actually trade well? You know, circumstances may not have been conducive to the trades that you put on or the type of system that you have, but did you at least stick to your system? Did you trade well? Did you keep your losses small and take profits when you could, let your winners run? All right, enough messing around. If you're going to go up, go up. Or don't. So that's going to do it for the morning. I'm going to cut the stream off now. I will be back at 1:30 Eastern Time. And we will see what the afternoon has in store for us. All right, enjoy your lunch.